Two Bowls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat, smiley face. All right, hello everybody, and welcome to the China Shop. We are back in a new year. It's 2023. Got Eric fresh from his trip to Vegas. Is that correct?
Yeah, Mammoth and then Vegas.
Oh man! Oh, so you did some skiing too, huh?
Shredding my life out.
Wow, good for you, buddy. You gotta take the time to enjoy the hard-earned gains, don't you?
I mean, Mammoth was all free, to be honest with you, so there was no gain spent there, but Vegas is always expensive.
Well, yeah, that's true. I'm sure Vegas made up the difference for you.
Yeah, if you sneeze in Vegas, you've spent money.
Right.
It's actually funny. I was talking to Mel about that, and one of the funny things about Vegas is I feel like they get commerce. They have it down. It's so easy to spend your money. I bought a slice of pizza, a slice of pepperoni pizza. It was $9.
It's like Disneyland.
Dude, it was so fucking good. I had it 2 more days in a row. Like, it's expensive. It's overpriced. I know it's not right, but they make it easy to spend. Because you're like, well, I didn't get a shitty piece of pizza. It was a really good piece of pizza. So fine, take the $9.
Yeah. It's all about value, right?
Exactly.
Oh, well, we are going to be talking about some news, but I think before we jump into that, I got to take a minute to say thank you to our sponsors and friends. As this is January, be surprised to know that we did end up getting a deal with Manscaped. So I'd like to thank everybody that helped support us in making that happen. It's definitely a milestone for the show. Along with Manscaped, we'd like to thank our friends too at Trade Pro Academy and Orderflow Labs. As you all know, Manscaped is the best in men's below-the-waist grooming with precision-engineered tools to protect your family jewels. And with those holidays over, now's the perfect time. If you missed out on that stupid 20% off discount code that they offered to everybody, now you can actually get ours and take advantage of that. We're using promo code 2bulls at manscaped.com. As always, that is the number 2. When it comes to institutional quality, trading, education, look no further than tradeproacademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. For all you degenerates who enjoy trading futures, definitely want to check out those custom tools and studies over at orderflowlabs.com. And of course, everybody needs to subscribe to Eric's YouTube channel over at ES Invests. Lots of great content on there. And hopefully we'll be doing a little more future collaborations together. And fair enough. And lastly, be sure to reach out with your suggestions, corrections, or questions for future guests. You can do that via email at 2bulls@financialineptitude, or you can just join that free Discord server where a bunch of amazing people gather to share our struggles and lessons learned with other like-minded market aficionados. Sure to put all those links in the episode description. But now that we got all that out of the way, let's talk about some stuff that happened this week.
Can you spell aficionado?
Yeah, AFFICANADOS.
Good for you.
Does Excel do spell check?
No, I mean, I thought it's one F, right? AFI.
Oh, it might be. I don't know. If Excel doesn't do spell check, I just read it.
That's actually why I asked you, because I didn't know if it was one F or 2 Fs.
I thought it was 2 Fs, but
just looked it up.
Now I have to look it up. It is 1 F.
Damn.
Let me fix that script.
That's a sick
big
burn.
Fuck you to the host.
You hate to see that.
Hey, I've never pretended to be right.
Well, I was just going to say, at least everybody knows that we're out here keeping it real, because apparently we're fucking spell checking on air.
Oh, no. I'll be editing all that out. Just the part where you said, good job. And I'll snip the other F out. Oh, the power of editing. No. All right, what should we jump into? I saw the Fed meeting notes were released today. Was there anything surprising in that? I mean, it's just a rehash of what we already knew, right?
Dude, I literally think that's it. I think the name of the game hasn't changed much at all. Like despite pretty much everybody's desire and hopes for a Fed pivot.
Hmm.
I mean, just like you were saying, there's none of them think we're going to see a pivot in 2023, and I think that what is it? There's like 15 of 19 policymakers are expecting the target rate to raise by 3/4 of a percentage point or a full percentage point in the coming months.
Ooh.
So I like it literally looks like it's all business as usual. The one thing I have to keep saying they're doing a good job on is staying the course, even
Yep.
though a lot of people question the course, and they're communicating very effectively around the course.
Yeah, they're not hiding anything. They've done exactly what they've said.
Yep.
It is kind
And
of surprising to see that, like you mentioned there, the no participants projecting a reduction in any policy rate this year. Like that, I thought was kind of surprising. I thought there'd be at least one dissenter, but they are definitely united.
yeah, which I think is good. I think there was what and no more than seven officials in agreement on any particular rate in an economy that still may be flirting or muddling through a recession, which that's always a fun conversation on the recession part. But
Yeah, yeah,
nonetheless, I think that essentially we can expect policy above 5% is
yeah,
really what I think it comes down to. And then I think on the backside is where we're going to see very likely way more dissent in terms of how they want to go about that.
yeah. The unwind, I feel like, is going to be a lot more
Mhm.
chaotic.
And rightfully so. We've never
Hmm.
done this before. Like just about everything about this is first of its kind. So you essentially just have to expect this to be a bit of a shit show. And I mean, there's so much baked into the policy at this point. So it will be really, in my opinion, like historic to see how this actually does unwind eventually.
Oh yeah, it's gonna be interesting. I think is the only thing I can really say.
Yeah, I think it's fair.
And like you said, like being the first of its kind, we have nothing that we can look to like try to get like comparisons.
Zero
Like
scale.
right.
Yeah, there's absolutely no scale. We've never seen really anything like this. And then also you coupled the market behavior that we've experienced at the same time.
Hmm.
And this was all just a big experiment. And I get, like they were backed in a pretty significant corner. So I know that they were doing what they could to try and navigate through all of this. But sooner or later, we are going to unwind. And I think that man, I mean, we'll see. I really I have nothing. Most things that happen in the markets or the economy, there's historic precedent of some sort,
Right.
but we can use other relatively quick rate increases and unwinds for some base mark. But the problem with that is it's just so different. It's so incredibly different that it's hard to draw a meaningful parallel there.
Yeah. The size and scope of the previous ones don't even compare.
Exactly. Yep.
Well, I did see another piece of news that at least points to the effectiveness of their war on labor, and that's with
Hmm.
Salesforce planning to lay off 10% of their staff, which equates to about 8,000 employees. It's kind of I didn't realize Salesforce was so freaking big.
Yeah, it's difficult because a lot of these places, again, you talk about whipsaw in the system,
Hmm.
and during COVID, a lot of these places saw just unprecedented need, right?
Yeah.
Especially
Yep.
in tech. They were just blowing up with business. And you kind of were experiencing the other side of that because beyond Salesforce, it's really like pretty predominant across tech in
Oh
general
yeah. Yeah.
to see these layoffs happening, and it's for that exact thing. They were hiring for one thing that persisted for a relatively brief period of time, and now they have to pivot again in order to make financial sense.
Well, here's the thing with Salesforce, though, is I mean, let's see. It says that they're just under 80,000 right now at the end of October. So 3 years before that, they were about 48,000. So that's still pretty substantial growth. Even if you cut 8,000 out of that, there's still quite a lot more employees in the last 3 years than there were, prior to that.
Yeah. Yeah. I think, despite the I would call it relatively like a temporary kickback on tech, because tech definitely isn't quite as in vogue right now. But I mean, tech is still, it's one of the few segments of the market, in my opinion, that has just insane growth prospects from here.
Right.
They have a scalability that a lot of other places don't have.
Biggest problem for them is going to be the Fed funds policies. The harder it is to get money, the harder it is to grow.
Yeah. Yeah, it's interesting. And I mean, even looking at, we have some interesting labor force information coming out later this week that I'm really curious about. But I think like what on, I think Friday, it's non-farm payrolls.
Yeah,
We
yeah.
have
We had job openings today.
yeah, job openings came through today. The prior was 10.334 million. Consensus was 9.9, and that came in at 10.458.
Wow.
So yeah, that came in high. And then we also had the ISM manufacturing PMI. The consensus for that was 48 and a half, and it came in at 48.4. So kind of right in line there. But yeah, I think later this week when we see the payroll information coming out, I think that will be really important data for us.
I hadn't been tracking the ISM as much lately. The last time I had looked at it was probably 6 months ago, and it was still over 50s. When did it drop below the 50? Because above 50 is supposed to be expansion, and below is contraction.
Yeah,
right.
It's been below 50 for a while.
Has it been? Maybe I'm
Yeah, are
thinking
you
of something.
talking manufacturing or services?
I thought it was manufacturing, but maybe I'm misremembering that.
Yeah,
I already know
because
I can't spell.
yeah, non-manufacturing is still above 50.
Okay,
At least the last one. But manufacturing has been hovering below for, well, I'll find out right now for you. It's been a minute. So it looks like probably last 3 months.
Okay. Yeah, that sounds about right.
Yeah, of 2022.
Because
But
that was
like
one of
things
the
like new orders dropped early. I know new orders dropped like mid 2022, and then I think inventories has been hovering above. So yeah, there's the composite versus the individual pieces, but yeah, I think it's like probably last 2 or 3 months of 2022 is when it dropped below.
So all that information then, like what picture is that painting for you?
It's just all part of a broader global theme and economic theme. I always keep that in the back of my head. I don't really trade too many long-term economic themes, but it always informs my day-to-day decision making, specifically in terms of what kind of future impacts do I expect those kinds of forces to have on the markets, and what does that do to the trades that I'm putting on now. So for example, even though we're still seeing some market strength, I put on like 3 or 4 different tranches of short puts in IWM yesterday to kind of establish for the year. And it was across expirations, and it varied essentially from 10 lots to 100 lots. And I just had them staggered all over the place. And as soon as we started seeing those moves yesterday and today, I started pulling those trades down. And it's for this exact reason. Do I think that the broader economic theme is necessarily going to capitulate while I'm in some of those trades, specifically the shorter term data trades? Not so much. But as we continue to build what I would consider just general overhead, I think like that is a big part of how I choose to manage trades and where I will take profits when things are in profit bands. Like another thing I'm really keeping a close eye on right now is just G5 credit impulse percent, essentially, which is kind of a way for us to view money supply. And that is just plummeted. And that normally leads by 4 to 5 quarters, something like that. And right now, US year over year CPI lags normally by like 5 quarters. And the S&P 500, the market itself, typically lags by like 4 quarters. So we have like this money supply metric, and you can look at Macro Alf. He's a dude that talks a lot about money supply and whatnot. He's on Twitter. I like a lot of his work, and he'll talk about this stuff. But the punchline is, as I collect all of these different data points. I just paint a broader picture, a broader general theme that I then use that to inform how I'm deploying day to day, what timeframes I'm picking, how much risk I'm offering, all of those things. Because my goal is to continue to deploy, but to try to position myself to have the lowest probability of just getting ran over. That's all I'm trying to do. I don't care if I'm wrong here and there, but I just don't want to be like super wrong. That's when it hurts.
Yeah, you don't want to be short in a rip your face off rally where you can't even get out.
Exactly. That's exactly it. If I think if traders can trade general themes, but not get, and again, your timing can be wrong, but as long as you are not dead wrong, you can still kind of sort it all out. Like even the COVID drop that we experienced, like I was positioned tentatively going into that drop because of this same like theme process. I guess I'll just keep saying the same fucking word. But like it's because of the same exact process that I use. And I had risk going into the COVID drop that was bullish, but it was tempered. And that's essentially what allowed me to get through the drop on those bullish trades and actually make money on the backside from it. So I think, yeah, all of this paints kind of that broader picture for me.
All right. Well, thanks for sharing that. That's very interesting. What was the name of the cash flow thing you're looking at, the G5?
Yeah, so there's different metrics you can use depending on like what time frame and what level of cash flow you're trying to see, but the G5 credit impulse
credit impulse.
Yeah, that is essentially something that guy I mentioned, Macro Alf, really focuses on. I don't necessarily think that needs to be the guiding feature for you. I think the main thing, realistically speaking, is any sort of significant money supply indicator. That's really what it comes down to. Theirs is just kind of like a specific version of that they like to use.
Right, gotcha.
But yeah, it at least what it looks like right now based on general money flows, and you can use like different money indices as well. Again, if you don't want to use the G5 credit impulse, you can use other money indices, and all of them essentially are showing the same thing.
Gotcha. Well, I just wanted to know what to put because I'm gonna have to look that up. We'll make sure that Makarov is linked if anybody wants to throw a follow at him if they're not already. Support for Two Bowls in a China Shop is brought to you by Manscaped, who is the best in men's below-the-waist grooming. Their products are precision-engineered tools for your family jewels. Manscaped's Performance Package is the ultimate men's hygiene bundle. Join over 7 million men worldwide who trust Manscaped with this exclusive offer to you. 20% off and free worldwide shipping with the code 2BOWLS at manscaped.com. That's the number 2. And if my math is correct, that's about 14 million balls, and that's a lot of balls. I've tried beard trimmers in the past, but the electric pain of a trimmer catching the sensitive skin of my beanbag had turned me off grooming below the waist in the past. But after receiving the Performance Package 4.0 from Manscaped, my attitude towards below-the-waist grooming quickly changed. The Lawnmower 4.0's advanced skin-safe technology is a game-changer and quickly put all those old fears to rest. The cutting-edge ceramic blade really shined here, and I didn't experience any discomfort while mowing down a severely neglected and overgrown landscape. And trust me when I say this, but I gave this thing a workout. The 4000K LED spotlight is a great touch as well, especially when taking advantage of the fact that Lawnmower is waterproof. That's right, no more mess on the floor when you just use it in the shower. The Lawnmower really is the best ball trimmer I've ever come across. But the Performance Package 4.0 doesn't just come with the trimmer. It's jam-packed with goodies including Crop Preserver Ball Deodorant, Crop Reviver Toner, a surprisingly high-quality pair of free boxer briefs, and my personal favorite, the Weed Whacker Nose and Ear Hair Trimmer. No longer do I have to resort to ripping out overgrown nose hairs with tweezers, and because the waterproof Weed Whacker also provides proprietary skin-safe technology that helps reduce nicks, snags, and tugs in my delicate nose holes, it's a much more pleasant experience than the old methods. And not only do you get that free pair of boxers, they also throw in a free travel bag to hold all that swag. It's time to take care of yourself, so go to manscaped.com and get 20% off plus free shipping with code 2BOWLS. Trust me when I say this, fellas, your balls will thank you. I know mine did. So get 20% off and free shipping with code 2BOWLS at manscaped.com. That's 20% off with free shipping at manscaped.com and use code 2BOWLS, and that's the number 2. Unlock your confidence and always use the right tools for the job with Manscaped. Last thing, we got to talk about SBF, right? There's got to be some more news on this character.
He's like the Kardashians of the finance world.
In that he helped a murderer get off?
Yeah, I get. Yeah. Who knows what additional skeletons are in this dude's closet?
Right. You missed it. We talked a little bit about the book deal, but it looks like you found another piece of news. We did talk about the Robinhood shares recently because that was one of the assets that he borrowed customer funds for to purchase that stake. And I think there was a question of like who was going to try to seize that.
Yeah, it looks like he owned 56 million shares or 7.42% of Robinhood stock.
Yeah, yeah. When did he buy that? I was curious what his cost basis was because Robinhood's kind of been in the shitter.
I actually have absolutely no idea. So it looks like it's a 460 million FTX linked stake.
That's probably about all the money he has left.
And I mean, the fact that he has anything left, pretty impressive. But
so what was in the story that you found?
yeah, it was mostly that, just the overall size of the position that he had, which I personally found pretty interesting. But then it's also the fact that they're essentially going through all of his different assets, and as they flip up these different rocks, they're finding different things. And the fact that he pleaded not guilty,
that I can't believe.
I am literally like, if you offered me probabilities on that, I would have said probably 70% probability that he would come up with a plea deal. Like, I thought for sure that's where he's going to go.
Especially if you've seen some of the stuff that his, like the Wood Nymph said about him. Like, it looked like she was trying to position herself for a deal because she pled guilty.
Yeah.
I don't think she's fallen on the sword for him, right? I look more like she was like, I'll cooperate. Give me a better deal. I'll give you whatever you want.
That's what I took. It, to me, it genuinely, it could be one of two things. It might be the deal that he was offered was pretty aggro because the prosecutors might look soft if it wasn't, robust enough. So they might think they can be able to get something better through the trial. Like, I don't think there's a world where he gets off free here. But the other thing is, and this is a thing that attorneys will do, man, like they make way more money if he goes to trial.
Oh yeah.
So they're incentivized. So if that's my at least loose hypothesis, is those two things might have coincided together, where the prosecutors were being pretty aggro just because of all the publicity around this. They didn't want to come in too soft, and you get attorneys that are probably like, I mean, even if we get something better than this, that's win enough for them, and they'll make more money doing it.
So actually, you make a good point. Didn't Biden like who? Well, let me maybe back up a minute here. Like, who is actually in charge of prosecuting this? Like, what branch of the government does it? Is this the SEC? Is this some other legal arm? Is it like a state attorney, like prosecuting attorney?
I'm not mistaken, it's the Department of Justice, isn't it?
Okay, because a lot of the people that I know that Biden was installing in the like the SEC chair and people in like the market type spaces, he was putting a lot of people in there that were like pro retail, anti corporation. So I wonder if some of that was actually affecting the kind of, if there was a deal. There's a lot of speculation there. Maybe I should just stop.
But this is all speculate. Like, how could you not speculate on this? It literally is like, as this thread continues to get pulled, it's like, how could, like, I wouldn't be surprised if there's a dead hooker somewhere. Like, I don't know where they're at yet, but I mean, if we're talking about conjecture, I could see it at some point that might come. Like, there's just so much insanity that's come out of this story that I don't even think like wild speculation is that wild given in context.
Right.
Yeah. So it looks like he was at federal court in New York City. So yeah, it sounds like DOJ.
Okay. They're moving pretty quick then. He's already got a plea in.
Yeah. I wonder, they I assume they got to be fast tracking it to some degree just because of, obviously the cryptocurrency's got to be hanging on this right now.
No, I'm sure. I want to know if the guy who is writing his book is still tagging along or if his access has been cut off yet.
Dude, what do you even do with that book now?
Oh, you have to release that. That's going to be amazing.
And then, but at the end, it's just got to be like, and it was all fucked up the end.
Well, it makes you wonder, like, how much of that was he picking up on when he was trailing him for like the 6 months before that this whole collapse happened? Because he'd been following him around he's had a front row seat to this whole thing, as Robert said last week.
You've got to imagine that they've just been watching this. anybody that's like even reasonable in their assessment of things has to have been looking at this saying this is all fucked up like a football bat. Like
Right.
this is none of what's happening here makes sense.
Yeah.
That's
Yeah.
my guess.
All right, well, that's enough of that. We'll definitely have another update next week, I'm sure. 'Cause just can't stop ourselves.
Right.
SBF, I
Yeah.
just can't quit him.
Yeah. I was just gonna say I'd like as of right now, you might be able to consider me an SBF groupie
I know,
because
right? At this point, I'm just waiting for the Theranos treatment. Like, I want to see the Netflix special.
Did you see the Netflix special on AMC and GameStop?
No, I didn't. How was
Very
that?
good.
Yeah.
Yeah, very good. Yeah. Even my
Okay.
wife, who doesn't really like this stuff,
Hmm.
like multiple points during that, like no shit, her jaw dropped and she was like, "What?" So there's a lot of stuff in there that's just very difficult to believe happened.
I didn't realize that come out already. All right, yeah, I'm
Yeah.
gonna have to check that out. Last thing I wanted to talk before we wrap up here is just with it being the new year, I was kind of struggling with like getting the motivation to try to get back into the grind of doing all the things that I have to do to be successful. And I was just curious, like, what your process is for how to get back into it after you've been off for extended periods of time.
I'm I'm probably one of the annoying people, like,
You just
you
never
don't have to.
stop.
Yeah, you don't have to get back in shape if you don't get out of shape. Like
Yeah.
I am very much one of those people. And the way that I've built my approach to trading, it's very flexible.
Hmm.
So what like the positions I was talking with you about yesterday, those positions really are built around longer term kind of just establishing risk early. So for me, a lot of times I will try to front load the year a little bit so that I can at least get risk established and then move around that risk as I need to. This
Hmm.
changes depending on just the way I feel about the broader markets. Like right now, I don't feel as tenuous as I did in 2020 or even in 2021 because I feel like a lot of the information is out and digested, barring the stuff that comes off the wall that I don't know.
Right.
So the way that I would consider for kind of the more active people that have what I would consider to be a more arduous process in general, I always think about starting with lighter risk in those scenarios. Like if
Yeah.
you're a day trader that's trying to, get back into identifying your signals and stuff like that, I would be going lighter risk. I purposefully develop an approach to trading that I don't have to do that because I do find that very arduous. But I understand that for some people that's their preference, but I think there's nothing wrong with being mindful of how much risk you choose to offer the markets and keeping that to a minimum. But other than that, I really do think there's something to be said for, and this is why I talk about almost always maintaining market exposure because it's not like literally nothing has changed. The only thing
Hmm.
that happens, I'm going to have to pay a bunch of fucking taxes, which I hate. But other than that, like the process as I deploy it, it makes zero difference to me if it's the end of December, if it's the beginning of January, if I've taken a week off, 2 weeks off, a month off, it's all the same.
Yeah, there's not no routines that you have to try to get back into. You kind of maintain them as you go.
And speaking of routines, I like even when I'm off, I still keep a lot of my regular routines. Like if I'm when I was up in Mammoth and whatnot, like I was still working out. I
Hmm.
always work out. So for me, it's easy to maintain those kind of routines. Really, the most difficult routine to get back into is martial arts because some of these people, when you train with the same people for a while, you get very similar,
Hmm.
but some of them, you have to like get back into the swing of feeling a active opponent again. You know what I mean? Like that's a little different. But for trading, I think I would start with small risk, scale in as you identify general market themes, which I do think if people don't do that automatically, like I tend to do, I do think that's super important to like look at the broader economic picture, not try to predict where the market's going to go, but to just try to get a sense of where do you see risk and
Hmm.
how do you think the market will react throughout the year? Because again, I think all of that's super informative on how you choose to execute your day to day.
Think I like your sports analogy. Actually, there are some parallels to sports and trading. Like, you're not going to just step onto the gridiron and go and start the game like after you've been sitting on your ass for like 2 weeks. No, you gotta build your way back up to that to game time shape, right?
Exactly. And I think that for the people that trade that way, I would, liken it to a training camp for any sport, like fighting, right?
Mm-hmm.
Those guys go through a specific camp leading up to whatever event they're going to compete in. And I think if you trade that way, that's exactly the way I would view the lower risk scaling in over a period of time. It's kind of like training camp. I
Gotcha.
think, yeah, I think for me, I tend to deploy more like those fighters that would have a shorter term training camp just because they stay closer to whatever their competition is.
Mm-hmm.
And really, for a lot of those dudes, training camp just comes down to making weight and their, weight making process. But so the skill set, otherwise, though, they're essentially training all year. And that's the way that I tend to identify a little bit more.
Well said. Thanks for that, Eric. Thanks for dropping by again. We missed you last week. Thanks to all the listeners who made 22 an amazing year for us. I'm gonna have some more announcements coming out probably in the next week or so. Should we just say goodbye and just be done with it?
Goodbye.
Can you say it with some feeling though? It always sounds like you're like just like goodbye. Or are you just sad to be going? Is that the problem?
Goodbye.
All right. Bye, everybody. See you next week.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.